Yo, what's up everybody? This is the video on order blocks and breaker blocks, and this is a fairly simple concept, right? They're essentially zones that price is going to react off of. And so I'll go ahead and show a bullish and a bearish draw out of what each of these things are, and then I'll go and show it in the charts and go ahead and explain a little bit more in detail of how to use it. All right, so for a bearish order block, so like if we have a bearish bias and we're waiting for a retracement to the upside, and then so we can get an entry to go short, this is what the zone we're going to be looking for, right? So we're going to be trending upwards, right? We break structure to the downside. What is it? It's pretty much the last up move, right? Last bullish move before the break structure to the downside, right? So let me go get my rectangle. This is the zone right here. This is the order block. So what we're looking for to happen here is just press continue down and then retrace into the order block and then go down. So that's the zone. For a bullish example, I'll go show that too. Price is trending downwards. Boom, boom, boom. Break structure. Where's the order block at? It's the opposite move before the break structure upwards. So right here, this is the zone. What are we looking for? Press go up, retrace into that zone, continue upwards. So breaker blocks are essentially failed order blocks. So if we're looking for a bullish breaker block, it's going to be a bearish order block that's essentially flipped. So for a bullish breaker, let's say market's trending downwards, it looks something like this. Where's the order block at? Right here. So we want price to retrace into that order block and then go down, right? Let's say it doesn't, right? Let's say it goes past it, disrespects it. This is what that order block is now a breaker block, a bullish breaker block, as opposed to a bearish order block. So it's going to retrace into that zone and come right back up. And so same thing, market's trending upwards. We have our order block right here. We'd want to see price go ahead and come back into it and continue higher, but it doesn't. Instead, it goes past the order block and then comes back up into that now breaker block, continues downwards. So essentially like this. And I want you to understand that when you look for them in the charts, you do not highlight the wicks at all. The wicks do not count as part of the zone. It's only body. And so it's going to look like this. So an order block is essentially, and it can be multiple candles, right? Don't let people tell you that it's only one. It can be that whole move up or the whole move down, right? Consecutive candles are what you're going to be wanting to highlight in the order block and breaker blocks. So for order blocks, the way I understand it is candles or multiple candles, their bodies are the opposite of market structure. So like a bullish order block, then you want to see a bearish candle. And for bearish order block, you want to see bullish candles. And so for breaker blocks, they're the same thing. The candles or candle, their bodies are going to be the same as market structure. So for a bullish breaker block, you want to see a bullish candle, bearish breaker block, bearish candle. And so I'll go show examples. So this is an example of a bullish order block. So with swing high was taken, market structure is bullish. So we're looking for bearish candles / candles, right? So we see this right here. And we're only highlighting the bodies, consecutive candles. It can only be one. If there's only one black candle, we'd only highlight the one, but there's two consecutive ones. So this is our zone, and you can see price went back into that zone and respected and came back up. Okay, so this is actually a good example of a breaker block as well. So you can see these three consecutive candles serve as a breaker block, and I'll go show why. So you can see that, so if you were only looking at the chart just like that, right, you'd see, where's the order block at? Right here. You want price to come back into and then go down, but it doesn't. Price runs past that zone, and then you can see it comes right down and then rebounds off of it. So this is actually a pretty good setup right here too. So you have this breaker block, you have this order block, and also paired with a fair value gap right here. So really good confluence setup right there. And for a bearish breaker block, I have one saved right here. Again, so for a bearish breaker block example, I have one right here. So when price was essentially sitting like this, we have this order block right here. Like you can see it, all you need is it can work with only one candle. And so, and however, instead of, coming down and going up off of that, we went right past it, and you can see, so we have this zone drawn out, we consolidated a little bit in it, and we came down and we came right back into that zone and continue downwards. And we also met this zone again, and we continue downwards off of that. And so that's the explanation of breaker blocks and order blocks. But so for high time frame, right, for zones I'm looking to see market structure change off of or see strong reactions off of, I'm looking at only the zone, right? But in terms of setups, like if I take a fair value gap setup, take a trade off of a fair value gap, I want it to be paired with a breaker block or an order block. And that allows me to have a pretty good win rate as opposed to just taking fair value gap entries. And so high time frame, I only look at the zones. Fair value gap is not needed. I'm only looking at the zone of order block and breaker block, but on low time frame, I'm looking at a fair value gap paired with one of those two blocks. And so yeah, that's a wrap on the video, and happy trading.